The stock market can be a wild ride, and with all the volatility, it's easy to get caught up in the chaos. But what if I told you there's a way to weather the storm and thrive during uncertain times? Well, folks, the time has come to start loading the boat on dividend stocks, and we mean loading the boat. The same phenomenon that happened last year is happening this year, just with dividend stocks rather than growth stocks. Today, we're diving into a topic that's been in our minds lately, and we believe you will want to take advantage of it. That's right, we're talking about dividend stocks, and we've got some insights and strategies that might change how you approach your investments. We can't stress enough how crucial dividend stocks can be for your portfolio. They provide stability, consistent income, and the potential for long-term wealth growth. Imagine receiving those dividend checks in your mailbox or seeing those deposits in your brokerage account like clockwork. It's like having your money work for you while you sleep. In this video, we'll explore the world of dividend investing together. We'll discuss the benefits, share strategies, and explore some of the best dividend stocks. So, are you ready to supercharge your portfolio with dividend stocks? Let's get started. Last year was a roller coaster ride in the world of investing. We saw growth stocks getting wrecked, tech stocks taking a massive hit, and the Nasdaq index plummeting. For many of us, it felt like a never-ending downward spiral. Whenever we thought the bottom was in, stocks kept going lower and lower. The financial news was flooded with stories of market volatility, economic uncertainty, and investors grappling with their portfolios. But here's the thing. While it may have felt like doom and gloom, it's crucial to put last year's stock market turmoil into perspective. Throughout history, we've seen markets go through ups and downs. It's a natural part of the investment cycle. You see, those stocks did bottom out, and many investors who weathered the storm eventually saw a rebound around October or November. Let's take some specific examples: Nvidia, Tesla, Meta, and Palantir. First up, Nvidia, a tech giant known for its graphics cards and AI innovations. Nvidia Corporation, often called as Nvidia, is an American multinational tech giant headquartered in Santa Clara, California. Founded and incorporated in Delaware, Nvidia has played a pivotal role in shaping the tech landscape. What makes Nvidia stand out in the tech world is its specialization. This company excels in designing graphics processing units, commonly known as GPUs. But Nvidia isn't just about hardware. They also provide essential software and APIs for data science and high-performance computing. Nvidia's products find applications across a spectrum of industries. Their professional GPUs are the go-to choice for architecture, engineering, media, automotive, and scientific research workstations. Nvidia GPUs are not limited to one niche. They are integral in edge-to-cloud computing, powering everything from edge devices to data centers and supercomputers. They've truly bridged the gap between hardware and software. Gaming enthusiasts, take note. Nvidia has made significant strides in the gaming industry, from the Shield Portable and Shield Tablet to the Shield TV and their cloud gaming service, GeForce. Now, they've revolutionized how we play and experience games. For years, Nvidia's stock seemed unstoppable, with consistent growth thanks to their dominance in the GPU market and booming demand for their products. A major factor behind Nvidia's success was the cryptocurrency mining craze. Miners found Nvidia GPUs incredibly valuable for mining, and that demand skyrocketed the company's revenues. However, the first blow to Nvidia came from supply chain disruptions. The pandemic wreaked havoc on global supply chains, making it challenging for Nvidia to meet the surging demand for their GPUs. Then came the big hit, the cryptocurrency crash. As governments cracked down on mining operations and cryptocurrencies experienced a significant downturn, Nvidia's GPUs, which were once flying off the shelves, were suddenly in oversupply. Adding to the mix, there was growing regulatory scrutiny worldwide on cryptocurrency. This further unnerved investors, creating uncertainty around the demand for Nvidia's GPUs. And just when it seemed things couldn't get worse, global chip shortages hit the tech industry. Like many other tech giants, Nvidia found it increasingly challenging to source essential components, affecting their ability to meet market demands. To top it all off, Nvidia reported on earnings miss, failing to meet the high expectations set by the market. This led to a cascade of selling pressure from institutional investors and retail traders. The culmination of these factors led to a steep drop in Nvidia's stock price, leaving investors and analysts scratching their heads. In 2021, it was trading at over $325 a share, but then it took a jaw-dropping nosedive, plummeting to around $110 a share. That's more than 60% drop. So what does the future hold for Nvidia? Can they bounce back from this setback? Many experts believe that with their track record of innovation and strong fundamentals, Nvidia is well positioned for recovery in the long term. In the unpredictable world of tech stocks, it's not uncommon for giants like Nvidia to face challenges, but it's how they adapt and grow that defines their legacy. We'll closely monitor Nvidia's journey and hope you will too. Now let's talk about Tesla. To understand the plunge, let's first recall Tesla's incredible rise in previous years. Tesla, led by Elon Musk, was hailed as a game changer in the automotive industry, and its stock price reflected that, soaring to unprecedented heights. A significant part of Tesla's success was fueled by the electric vehicle hype. Tesla's innovative EVs were seen as the future of transportation, attracting legions of devoted fans and investors. Tesla's stock price reached new highs as they reported consecutive quarters of record profits, convincing investors that the company was on an unstoppable trajectory. Another factor in Tesla's profitability was the sale of regulatory credits to other automakers. These credits became a substantial source of revenue, helping Tesla maintain its profitability. However, as 2021 rolled in, the competitive landscape changed. Established automakers and startups alike began seriously challenging Tesla's EV market dominance, creating concerns among investors. Adding to the mix, Tesla faced battery supply shortages, hindering their production capabilities. This created doubts about their ability to meet the growing demand for EVs. It wouldn't be a Tesla story without mentioning Elon Musk's tweets. His social media presence, while entertaining, sometimes led to market volatility, shaking investor confidence. Tesla also faced challenges in China, their biggest market outside the US. Reports of quality issues and protests at their Shanghai factory made headlines, denting Tesla's reputation. Rising interest rates in 2021 prompted investors to reevaluate high-flying tech stocks like Tesla. Higher interest rates could impact the company's borrowing costs and valuation. All these factors combined to create a perfect storm for Tesla's stock. In the later half of 2021, Tesla's stock experienced a significant tumble, leaving investors bewildered. Despite these challenges, Tesla has demonstrated resilience. They've expanded their production capacity, diversified their product line, and made strategic acquisitions to secure their position in the EV market. Looking ahead, Tesla continues to work on innovations like self-driving technology and energy solutions. These endeavors could reignite investor confidence in the long run. In the world of stocks and investments, it's essential to remember that even giants like Tesla can experience sharp fluctuations. Whether Tesla can regain its former glory remains to be seen, but one thing is certain, the EV industry is here to stay. Now that we've covered the roller coaster ride of Tesla's stock in 2021, let's shift our focus to an even more exciting and futuristic topic: Meta. Before we talk about the stock's fall, it's essential to mention the company's rebranding. In October 2021, Facebook announced it was transforming into Meta, reflecting its shift towards building the metaverse, a virtual reality-driven digital universe. Initially, this move generated a lot of excitement and hype around the company's prospects, leading to a surge in its stock price. However, the core social media platform Facebook began facing mounting criticism and regulatory challenges. Concerns over misinformation, privacy issues, and the impact on mental health created a cloud of uncertainty. things took a serious turn when former Facebook employee Frances Haugen came forward as a whistleblower, testifying before Congress about the company's practices and the harm they allegedly caused. This had a profound impact on Meta's image and stock. The whistleblower testimony and ongoing regulatory scrutiny put Meta in the crosshairs of lawmakers and regulators worldwide. The threat of stricter regulations weighed heavily on investor sentiment. As Meta pivoted towards the metaverse, investors began questioning the company's ability to monetize this new venture. The metaverse, while promising, is still in its infancy and may not yield profits for some time. Additionally, the slow adoption of virtual reality or VR technology and concerns about affordability hindered Meta's ambitions in the metaverse. All these factors combined to create a perfect storm. Meta's stock price took a significant hit, leading to a decline in market capitalization and investor confidence. In response, Meta has been working on addressing the issues raised by regulators and the public. They're investing heavily in content moderation, privacy controls, and responsible AI. Moreover, Meta remains committed to its metaverse vision. They are pouring resources into building a new digital reality, and their success in this endeavor could turn the tide in their favor. The road ahead is still being determined for Meta, but the tech giant is familiar with challenges. They've weathered storms before and adapted. The metaverse may well be their ticket to a brighter future. Companies like Meta are constantly evolving and facing challenges in the fast-paced worlds of tech and social media. Whether Meta can regain investor trust and fulfill its metaverse dreams remains to be seen. Now that we've unraveled the challenges Meta, formerly Facebook, faced in 2021, let's shift our focus on an equally exciting and transformative topic: Palantir Technologies. Before we explore the fall, it's important to note Palantir's remarkable rise. The data analytics company gained notoriety for its powerful software used by government agencies, financial institutions, and businesses worldwide. Palantir's stock was buoyed by the surge in demand for data analytics during the COVID-19 pandemic. Their software proved invaluable for tracking and analyzing pandemic-related data. Palantir went public in late 2020 and received a warm welcome from investors. Its stock price surged soon after the IPO, reflecting optimism about its growth prospects. One of Palantir's key revenue streams is its government contracts, and they secured several high-profile deals, including ones with U.S. defense agencies. As government and corporate clients sought data-driven solutions, Palantir's stock price reached all-time highs in early 2021. However, the tech landscape is dynamic, and Palantir faced increasing competition from other data analytics companies, impacting its market dominance. Investors became concerned about Palantir's ability to maintain its rapid growth and questioned the company's valuation. This led to heightened volatility in the stock. Things took a dramatic turn when Palantir reported lower than expected earnings in Q3 2021. This disappointment sent shockwaves through the investor community. The company also faced criticism over its profitability as it continued to post losses despite its growing client base. As a result of these factors, Palantir's stock price experienced a noticeable decline, causing anxiety among shareholders. Palantir has been working on diversifying its client base and expanding its product offerings. They are also focusing on becoming profitable in the long run. Looking forward, the future of data analytics remains promising, and Palantir's experience provides valuable insights into the challenges and opportunities in this sector. Now let's compare that to dividend stocks. Some of the best dividend stocks like Walgreens, Foot Locker, Target, and others are going through a similar situation. Every time you think they've hit bottom, they fall lower and lower. What's intriguing is that dividend yields are reaching unprecedented levels. Walgreens, for instance, now has a shocking 8% dividend yield. A 4% dividend yield is typically considered excellent. Some of these dividend yields are getting close to 8% or even more. So what happens if a recession comes in 2024? In a recession, people tend to move money into safer stocks. Stocks like Walgreens, which provide essential products, continue to perform well regardless of the economic climate. The Federal Reserve plays a significant role here. If a recession hits, the Fed is likely to lower interest rates which can benefit companies with high debt loads. Additionally, people may shift their investments from low-yielding savings accounts and treasuries back into dividend stocks seeking higher yields. And that's a wrap for today's video, my fellow investors. We hope you found this discussion on dividend stocks both informative and inspiring. Remember, when it comes to building wealth through investing, buying dividend stocks and holding onto them can be an incredibly powerful strategy. So, heed our advice, buy dividend stocks and don't stop. That first investment begins with the journey to financial independence and a secure future. If you have any questions or want to share your experiences with dividend stocks, please feel free to comment below. Don't forget to subscribe to our channel for more valuable insights into the world of finance, investing, and wealth building. Thanks for tuning in. Check out more videos about ETFs, the secret millionaires don't want you to know, and options trading, a complete guide. These videos will dive deep into the world of stocks, sharing tips and tricks and everything you need to know to become a successful stock market investor. Until next time, see you in the next video.